Hi, my name's Corinne Wild and I'm an independent financial advisor at Three Counties. Getting the risk right. How do you get the risk right when you are investing? Well, a lot of people think that investments are automatically high risk. People think investments and they think shares. Now, this might be the case. Investments can be high risk. However, there are varying degrees of risk and volatility to which you can subject your money depending on the investments that you go for. Now, a financial advisor can take all of the guesswork out of establishing a correct level of risk by recommending a suitably risked investment portfolio to you, which is based on your objectives, your circumstances, and your own feelings towards risk and volatility. The way we do this is firstly by looking at your objective, finding out what your money's for, what you need it to do for you, and when. We will then be able to have a conversation with you about risk and reward, about your growth or income expectations, and how much risk or volatility you are willing to experience to get you to where you need to be financially. As part of the conversation, we will often complete a risk profiling questionnaire. This asks lots of different questions about risk and volatility to make sure we understand how you feel about the potential of certain scenarios in future years. So it could be, how would you feel if this happened, or what would you do if that happened, to make sure that we understand what you would likely do or feel in certain scenarios. Once we have established a certain level of risk based on the outcome of your questionnaire, that then facilitates a further conversation about that level of risk and what it may be like to invest into a portfolio at, for example, a high risk or a low risk or a medium risk or anywhere in between. This conversation will be more specifically about volatility. How high will the highs be? How low could the lows be? Because the journey that you will be on as an investor is not going to be one of fixed returns and straight lines. There will likely be ups and downs along the way. So to ensure that we understand what you would be comfortable with is really important. And also how you would feel if certain things happened, for example, a market crash, and what you would do in that scenario. So for us to understand your tolerance towards volatility is absolutely crucial. Also, factoring in things like an adequate emergency fund is important to make sure that you would have money to fall back on should you need it if you were unable to access your investments for a certain period of time due to volatility. And finally, we will talk to you about capacity for loss and make a recommendation to you based on, one, your feelings towards risk and volatility, but also your capacity for loss. This means, can you afford for the investment to go down in value? Can you afford to lose money? If the answer is no, that means that investment may not be suitable for you. If the answer is yes, that allows us to demonstrate that should you be comfortable with a given level of risk, it is actually affordable for you to take that level of risk also. Once the conversations have come to an end and we have discussed all of the things just mentioned, at that point, a financial advisor will be able to talk to you about a specific level of risk which will be recommended for you and the reasons for that recommendation, and also talk to you about the way that sort of investment is likely to behave. At that point, a recommendation for a specific investment could be made for you.